Why the Fed is fighting a losing battle with the US government. You are not going to like the answer. The Fed never seen inflation coming, even after people receive stimulus checks from the government. Even today, government giving money away like student loan forgiveness, inflation reduction stimulus, while the Fed is trying to, quote, control inflation, trying to stabilize prices. Why are gas prices still so high? Why most developed economies are undergoing a fundamental shift, lasting changes on many levels, and why the system most investors have become accustomed to over the past 40 years has become invalid. Many investors today still pretend that we're in the system that we had from 1980 to 2020. We're not. What kind of changes? Is the globalization finally over? What does that mean for our economy? Can raising rate actually solve this inflation problem we have right now? I can explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. You know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning to your life. If you play your cards right and completely submit, like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You need to be my client, don't you? We currently experience 8% plus inflation in Europe and the US. We are looking at a prolonged period of financial repression. We are heading into a new era of deglobalization in which global trade is slowing down, disintegrating, causing a breakdown in supply chain. This is structural in nature, not cyclical. We are experiencing a fundamental shift in the inner workings of most Western economies. In the past 4 decades, we have become used to the idea that our economies are guided by free markets. But we are in the process of moving to a system where a large part of the allocation of resources is not left to markets anymore. It's about an economy where the government plays a significant role in the allocation of capital. The main reason why this is happening is that our debt levels have simply grown way too high. Total private and public sector debt in the US is at 290% of GDP. It's at a whopping 371% in France, and above 250% in many other Western economies, including Japan. The Great Recession of 2008 has already made clear to us that this level of debt was way too high. We can't stand normal, necessary recessions anymore without fearing a collapse of the system. So the level of debt, private and public, to GDP has to come down. And the easiest way to do that is by increasing the growth rate of nominal GDP. That was the way it was done in the decades after World War II. The power to control the creation of money has moved from central banks to governments. By issuing state guarantees on bank credit during the 2020 crisis, governments have effectively taken over the levers to control the creation of money. Of course, the pushback to this thesis was that this was only a temporary emergency measure to combat the effects of the 2020 crisis. But now we have another emergency with the war in Ukraine and the energy crisis that comes with it. There is always going to be another emergency, which means governments won't retreat from these policies. Just to give you some statistics on bank loans to corporates within the European Union since February 2020. Out of all the new loans in Germany, 40% are guaranteed by the government. In France, it's 70% of all new loans. And in Italy, it's over 100%. Because they migrate old maturing credit to new government guaranteed schemes. Just recently, Germany has come up with a huge new guarantee scheme to cover the effects of the energy crisis. This is the new normal. For the government, credit guarantees are like the magic money tree, the closest thing to free money. They don't have to issue more government debt. They don't need to raise taxes. They just issue credit guarantees to the commercial banks. It's easy for them in the way that credit guarantees are only a contingent liability on the balance sheet of the state. By telling banks how and where to grant guaranteed loans, governments can direct investment where they want it to be. They want it to be in clean energy. Projects aimed at reducing inequality, or general investments to combat climate change by guiding the growth of credit, and therefore the growth of money. They can control the nominal growth of the economy. And given that nominal growth consists of real growth plus inflation, the easiest way to do this is through higher inflation. Yes, engineering a higher nominal GDP growth through a higher structural level of inflation is a proven way to rid of high levels of debt. That's exactly how many countries, including the US and the UK, got rid of their debt after World War II. Of course, nobody will ever say this officially, and most politicians are probably not even aware of this. But pushing nominal growth through a higher dose of inflation is the desired outcome here. Don't forget that in many Western economies, total debt to GDP is considerably higher today than it was even after World War II. What level of inflation would do the trick? I think we'll see consumer price inflation settling into a range between 4 and 6%. Without the energy shock, we would probably be there now. Why 4 to 6%? Because it has to be a level that the government can get away with. Financial repression means stealing money from savers and old people slowly. The slow part is important in order for the pain not to become too apparent. We're already seeing respected economists and central bankers arguing that inflation should indeed be allowed at a higher level than 2% target they set in the past. Our frame of reference is already shifting up. Yet at the same time, central banks have turned very hawkish in their fight against inflation. How does that square? We today have a disconnect between the hawkish rhetorics of central banks and the actions of governments. Monetary policy is trying to hit the brakes hard, while fiscal policy tries to mitigate the effects of rising prices through vast payout. For example, when the German government introduced a 200 billion euro scheme to protect households and industry from rising energy prices, they're creating a fiscal stimulus at the same time as the ECB is trying to rein in their monetary policy. Who wins? The government or the Fed? The government. Did Berlin ask the ECB whether they can create a rescue package? Did any other government ask? No. This is considered emergency finance. No government is asking for permission from the central bank to introduce loan guarantees. They just do it. The central banks are impotent. This is a shift of power that cannot be underestimated. Our whole economic system of the past 40 years was built on the assumption that the growth of credit and therefore broad money in the economy was controlled through the level of interest rates, and that central banks controlled interest rates. But now, when governments take control of private credit creation through the banking system by guaranteeing loans, central banks are pushed out of their role. There's another way of looking at today's loud hawkish rhetoric by central banks. Teddy Roosevelt once said that, in terms of foreign policy, one should speak softly and carry a big stick. What does it tell you when central banks speak loudly? Perhaps that they're not carrying a big stick anymore. Now I'm going to show you my client, David Vine and Jama's Ignite the Passion, Co-Create Your Dreams book. Such an amazing book. And my client Teddy Eazzy's Wicked Pussy Perfume book. It is an erotic novel. Such an awesome book. And my book, Believe You Are Worthy. And my book, You Hold the Magical Key to Your Success. You are such a good boy for watching my video right till the end. Bye.